Hello everyone. Thanks for tuning into Indian Markets Unveiled, a podcast where we decode the Indian financial markets. To start off with the global market update, the US market ended the previous session higher ahead of the key US inflation data awaited today evening. The benchmark index S&P 500 concluded with gains of around 18 points and Nasdaq ended with gains of around 100 points or even more during Wednesday's session. The US reported producers and wholesale inflation data yesterday, and PPI inflation rose around 0.5% versus expectations of 0.3% on a monthly basis. The investors would closely follow today's US CPI inflation data, which is expected to be at 3.6%. So clearly an economic indicative action worth having a look at. The Asian market is also trading in green this morning, with Shanghai trading 0.5% higher, Japan trading 1.5% higher, and South Korean market is clocking a gain of around 0.8% and is almost a 1% gain ahead of key macroeconomic data. Also, the minutes of Fed's September monetary policy shows that Fed remains intact in its target to bring down inflation to 2%, and it may also prefer one more rate hike if required to combat inflationary pressure. On the bond yield side, the 10-year US bond yield fell a bit more and it is trading at 4.57%. So all in all, a stable set for global markets. On the commodities front, the Brent crude oil prices fell around 2.5% during the previous session, trading at $85 a barrel. However, the international gold prices moved nearly 1% overnight and it is trading at $1,877 per ounce, as a concern around the geopolitical uncertainty continues to persist. On the currency front, the dollar index remains firm at 105 and US monthly inflation data is likely to keep the dollar index in focus. So clearly limited action in the commodity markets at present, where we see Brent crude constantly falling. Coming to the domestic markets, the Indian market continued its buoyancy for two consecutive sessions and Nifty 50 closed with gains of around 121 points. However, Bank Nifty and Nifty IT underperformed during the previous trading session, while Nifty Auto, Nifty Consumer Durable and Nifty FMCG were the top gainers. On the flows front, FIs sold nearly 420 crores, while DIs bought around 1,032 crores. Though FIs continued with its selling streak, but quantum of sell-off reduced as India observed upgrade for CLSA and upward revision in FY24 GDP forecast by IMF. So of course the selling figures from FIs are still continuing, but the quantum is small this time, which is around 420 crore, while the DIs are constantly supporting and the latest figure is a buy figure of 1,032 crores. So positive signs from that side as well. For today's session, the Indian markets opened flat with Nifty 50 trading with gains of around 15 points this morning, while Nifty IT started with cuts of nearly 0.5% post the mixed numbers reported by TCS. It would be interesting to see how the rest of IT pack report its numbers. On the sectoral front, Nifty PSU Bank is leading the pack, while Nifty IT is the top loser among sectoral indices. In terms of top gainers, BPCL, IndusInd Bank, Adani Enterprises are the top gainers in Nifty 50, while TCS, Dr. Reddy's Laboratories, Bajaj Finance are the top losers. As the market has moved into earnings session, investors should apply caution and be mindful of the latest business development rather than betting on the basis of sentiments. Coming on to the stock-specific action, in addition to TCS, we have few other stocks in focus. To start with, we have L&T. L&T has been issued a penalty order of 65 lakh by the GST authority due to the disallowance of the transitional credit that was claimed. JSW Steel is another stock in action, where the company emerged as a favored bidder for the Jaisinghpura Iron Ore North Block in Karnataka, boasting a reserve of around 17.6 million tons. Maruti Suzuki, an automobile sector stock, another one which is in focus as the automobile manufacturer commenced exports of the Indian manufactured off-road vehicle Jimny 5-door to various destinations including Latin America, Middle East and Africa. So business expansion on the cards for Maruti Suzuki, which keeps it in focus. Going ahead, India Ratings has lowered the long-term bank and debt instrument rating for Vedanta from IND AA to IND AA- and concurrently placed them on rating watch with negative implications. So news for Vedanta which needs to be considered, as there is a rating which has come up. So all in all, IT sector is in focus as TCS has posted its numbers, and after TCS, a few other IT companies will also be posting its numbers, be it the large ones or the mid-cap and small-cap. IT space, the pack, needs to be considered. Apart from that, L&T, JSW Steel, Maruti Suzuki, Vedanta, a few other stocks which needs to be seen as there is a news flow and stock-specific impact coming on the back of the news. With this, we come to the wrap of Indian Markets Unveiled for today's session. To sum it up, the market would be focusing on the earnings coming from different sectors. The earnings season started in a muted manner with TCS reporting lackluster numbers in Q2, and the minutes of September Fed meeting indicated one more rate hike is on the card if required. Consequently, the start of the Indian markets has been flat for the day, while the markets is likely to take cues from the earnings of HCL Technologies and Infosys, as well as both domestic inflation and US inflation data. So of course, result-specific action needs to be considered, and economic indicative action coming from the global market and domestic market is also something which is a trigger you need to consider. So it is going to be a busy day for today and tomorrow, and investors should be more cautious because taking leveraged long positions ahead of such crucial cues awaited today and tomorrow. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksi have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on the wealth building adventure together. Thank you.